All right, my name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about something that I saw on TikTok. My TikTok friend shared this with me, and the TikTok essentially said that if someone owes you money and you really want to swim over, you can issue them what's called a 1095C, which is the cancellation of debt tax law. I was asked if that's something that's actually true and you could actually do to someone. And just the short answer of it is technically yes. But I wanted to get into it as far as what exactly is a 1095C, how does it work, and why would you use something like that? So the 1095C was created mainly for financial institutions, specifically credit card companies or lending institutions. So you will receive a 1095C if, say, you have a credit card and you default on the credit card and you don't make the payment. Let's say you get behind on payments and you don't wind up paying the card, and eventually the credit card company will close the card out, even though you still owe them, but they're essentially writing it off, taking an L on it, and they're no longer going to look to collect that money from you. So they've written it off as a loss. They've determined that your can't or you will not pay it back. So in those instances, the credit card company would issue this 1095C, this cancellation of debt. They send the form to you and they send the form to the IRS. And with that, if such form is filed, that reports to the IRS that canceled debt as income. So say you had 30,000 on a credit card that you didn't pay and they write it off, close the account, they'll issue you the 1095C for 30,000 of the remaining balance. So the IRS is expecting you to pay taxes on that 30,000. The premise being that you used that credit card to buy things and you never paid it back. So it was a loan, you never paid it back. So the loan or the debt should count as income. So that's what the traditional use of that Form 1095C is for. The question that was posed is, being that this was mainly for financial institutions, can someone do that for personal debt? Can you do it for business debt? Accounts receivable. Let's say you bill somebody and they never pay you. Was that something you can do? Now, I don't think that's something you can do on the business side with the cancellation of debt. I've never seen that done in the course of business. I think the recourse that you would have to do is go the legal route and look to obtain that money. But as far as looking to stick it to them, I don't know if it necessarily be a cancellation of debt. If anything, you could file a 1099 NEC or non-employee compensation or miscellaneous. You could file that. That might be the appropriate one to file. Again, I've never seen that. I don't know if I would necessarily suggest someone to do that because it won't really make any difference on your bottom line. You're just looking to stick it to them for not paying you. Probably better off suing. So that's on the business side. On the personal side, technically, there's really nothing stopping you from issuing that. If you were to loan someone some money with the understanding that they were supposed to pay you back and they don't, that is something you could do. Now, in order to issue this 1095C, you do need that person's social security number. That is a part of it. And then you have to issue your tax ID or your social as well. They do need to know who's issuing this and who you're issuing it to, and they need social security number. Also, you have to give a brief description on the form as to what the event was that caused this cancellation of debt. So you got to be pretty specific about it. And you should probably also have your documentation in order. So if you loan someone money and they didn't pay you back, probably need to make sure that you have a written agreement with that individual. Now, the IRS does not verify claims. As far as they're concerned, they're looking at it as more money for them because once these things get sent in, they're like, great, that's more tax dollars that we can collect. So the IRS doesn't bother to verify whether these submissions are legit. As long as you have someone's social security number, you could go ahead and issue one, and there won't be much of a question at the time that it's submitted. Now, the person that were to receive it may look to dispute it. That's where your documentation comes in. And the thing is, even if it's not necessarily true or valid, because the IRS is not going to question it initially and you want to fight it, you can inflict a lot of pain on someone by simply that person trying to fight it. If you were to issue this 1095 to somebody $30,000, they're expected to pay taxes on that $30,000 and they want to dispute it, they would have to go through to dispute it as far as contacting the IRS, calling the IRS, writing letters to the IRS, waiting months to get this resolved. It can be quite painful. So if you want to be a petty king or queen, get back at someone, the fight alone would definitely inflict some pain on that party. So it's definitely something that one could explore. On the personal side, wouldn't look to go that route for business debt, but either way, you want to make sure that you really have your documentation in order. Tough to do that on a handshake, or just in case when the person does try to fight it, IRS starts asking for documentation for debt or loans or whatever it is that you signed, because there should be some sort of documentation. If you're not able to produce that, that could be a problem. So make sure you document everything if you were to go ahead and issue such. So that's all for now. Hope this helped. If you have any more questions about this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. All right. So that's all for now, and I'll talk to you in the next one.